What if your accountant called you in April and the first words out of their mouth were, "So, about last year"? That sick feeling in your stomach is not a personality flaw. It is the predictable result of 12 months of financial improvisation catching up with you all at once. Every year, millions of people treat taxes like a surprise birthday party. They forgot to throw, scrambling at the last minute, stuffing receipts into shoeboxes, and praying the numbers work out in their favor. The cruel irony is that the tax code was literally designed to reward people who plan ahead. And yet most investors and small business owners act like the rules only apply to them in March. Here is the part that should make you genuinely uncomfortable. The difference between someone who pays $40,000 in taxes and someone who pays $25,000 is often not income, it is systems. One person has automated bookkeeping, tax loss harvesting, and retirement contribution triggers. And the other one has a folder on their desktop called Taxes Maybe. The catalyst for this whole conversation is actually the explosion of fintech tools platforms like Monarch Money, Copilot, and even embedded brokerage features that now automate tax loss harvesting in real time. What used to require a dedicated CPA and a Bloomberg terminal is now theoretically sitting inside an app on your phone, and that shift is enormous. But here's where the optimism gets complicated, because just because a tool can automate something does not mean it is automating it correctly for your situation. The tax code has over 10,000 pages of nuance, and an algorithm that harvests losses without understanding your income bracket, your carry forwards, or your state tax exposure is just a very fast way to make expensive mistakes. Think of it like cruise control on a highway. It is genuinely useful and it genuinely reduces fatigue, but has absolutely no idea that there is a school zone coming up in a quarter mile. Automation is a co-pilot, not a replacement for understanding what the plane is actually doing. And yet, here is the honest truth that the just hire a CPA crowd does not want to admit. Most CPAs are also doing reactive tax work, not proactive tax strategy. You are paying for compliance, not optimization. And there is a massive, expensive difference between the two. The common misconception worth destroying right now is that tax optimization is only for the wealthy or the complicated. If you are a W-2 employee who also has a brokerage account, a side hustle, or a rental property, you are already in the zone where automated tax-aware investing pays for itself many times over. So what does a practical, disciplined system actually look like? It starts with categorizing every dollar as it moves, not in December, not in February, but in real time, using tools like QuickBooks, Wave, or even a well-structured spreadsheet with monthly reconciliation built in as a non-negotiable calendar event. Then you layer in the investment side, maxing tax-advantaged accounts, first 401k, IRA, HSA, before touching a taxable brokerage, because that sequencing alone is worth thousands of dollars to most households over a decade. Tax loss harvesting in your taxable account then becomes the third layer, and that one works best when it is automated, because emotion will always talk you out of selling a losing position at exactly the right moment. Here's a historical pattern worth noting. The people who build boring, systematic, unemotional financial processes consistently outperform the ones who are constantly optimizing based on vibes, predictions, or whatever the financial media is catastrophizing about this week. Discipline is not glamorous, but it absolutely compounds. The philosophical truth underneath all of this is that the year-end surprise is almost never a tax problem. It is an attention problem, a systems problem, a "I will deal with that later" problem that matured into a bill. Treating your financial life with the same structure you would give a business is not obsessive. It is just respect for the time and effort it took to earn the money in the first place. So whether you are an investor, a freelancer, a landlord, or all three simultaneously, the message is the same. Automate what you can, review what you cannot, and never let a calendar year end without knowing roughly where you stand. The tools exist, the knowledge is accessible, and the cost of not building the system is always higher than the cost of building it. And if you are ready to take the next step, whether that means tax-optimized investing, getting your books cleaned up, jumping into real estate, finding the right lender, or even tackling a renovation project that changes what your property is worth. Check out the links in the description below because we can help you get started.